Traders, it is Thursday, June 9th. It is about 2 o'clock, as you can see down here, where we're at on the time. And I want to kind of go over a trade that we took this morning on the NASDAQ that resulted in $2 shy of 2,000 bucks on the day. Kind of want to walk you through that, why we're thinking about that, why we moved things the way we did, why we took the position size that we did. And the thing that we have to start with, guys, is trend, all right? So whenever we talk about this inside of our accelerator at trading price, when we're looking at position sizing and at directional trading, we start with trend. And what I see right now is basically for about the last week, the most of the indices, if not all of them, I'm not quite sure without peeking at them, they've all been kind of in this sideways market. So we've traded long a couple times, we've gotten short a couple times, we've missed a short here, but we've done pretty well this week on the NASDAQ alone. And what I saw here was a little 15-minute area that I kind of want to talk to you about today. We're in a sideways market. We're allowed to go long or short in the market. So what we have here is a drop-based drop that does create new lows based on the most recent lows that we've got here. It didn't breach down all the way down here, but it still is a pretty nice big move away from an area at about noon on Wednesday. So as price comes back up into this level, I'm noticing a few things. Number one is that we stall right before and that we come up. Now what I would really like to see is some negative divergence here on the chart, but I don't have that, so I have to keep that in mind. Second thing is that we're coming in at 75 on the RSI. That falls outside the scope of our preferences when we are trading. Therefore, because we are in a sideways market and because I don't have divergence and because I don't have our RSI where we would like it to be, which is below 60, I have to limit my risk. And I do that by limiting my position sizing. That is one step of it, is limiting the position sizing. The second step of it is once we enter the trade, we have to be aggressive on our targets and we have to be aggressive on our stop moving. Now, what that means is if we're in a sideways market and RSI comes up above the area that we want it to and we don't have divergence and we don't have a lot of the other stacking the odds studies in our favor, kind of looks like it's probably a little bit more than a 78.2% retracement. We'd have to see. But what that means is we have to be aggressive with our targets and we have to be aggressive with moving our stops. And so what that means for us is that we have to put our first target above the most recent high that we've got, which is where you have this green line with T1. Now, once we are halfway to T1, we move all 4 contracts to break even. Guys, trading, again, you're going to hear me say this time and time again, is that trading is about reducing risk. It is about moving with the market and trying to take risk out of the equation. So almost immediately, price falls from this area and now we have a free trade. Almost immediately, all right? And price comes back into above this area. We're off 1 contract, so we would have 3 left. And price retraces back up. It comes within about 4 points of us getting stopped out on the remaining 3 before price falls, comes up again, a little bit lower, and then the next 30 minutes we reach T2, which is also aggressive, also aggressive target. This is not what I would call an area of demand. I know we have a move out away from it, but it's very convoluted in here. It's not very tight or anything like that. But because, again, of the RSI and because we are in a sideways channel, I have to be aggressive with that. So, with that said, this is where T2 was. We hit T2, and we were trailing our stop using an 8 and 21 EMA strategy, which we go over inside of the accelerator. So at this point, we were down. We only had 1 contract running, and before you knew it, price came back in and hit our final target, which happened to be above this rally-based rally, which is also very wicky. Got out a little bit early. Think we missed out on about 50 points here. But overall, a very high quality trade where we were able to reduce risk almost immediately. We limited our position sizing, and we were still able to capture gains in a sideways market, resulting in $2,000 on the day on the MNQ. So, guys, just some of the things that we go over inside of the inner circle, some of the things that we talk about. You can still make money in a sideways market. You can still make money when momentum isn't necessarily in your favor. You just have to trade well. You have to follow rules. You have to reduce risk, and that is what we are about here at Trading Price. So, guys, hope you enjoyed this teachable moment. As always, you can subscribe to our YouTube channel, and you can check us out at tradingprice.com. Give us a thumbs up. Give us a like. Give us a subscribe if you enjoyed this and you want to see more trades like this in action. All right, guys, take it easy. Have a great day.